this morning's Money Watch, saving big bucks on your taxes. April 15th is not that far away, so our financial advisor Ray Martin is here to show us how to take advantage of 5 tax breaks that a lot of people actually overlook. Good morning.
Good morning, Maggie.
The question is, why do they overlook them? I'm thinking they want to either avoid an audit or they just don't know about them.
Yeah, you know, and avoiding an audit thing, if you claim egregious, huge tax breaks here, you know, you're not going to get an audit just for claiming what you're rightfully to claim. And a lot of people just don't know about them. You're right. Folks who itemize deductions get 4 times more tax deductions than folks who don't. So listen up. We got 5 great tax tips.
This is worth knowing. Okay, the first one, I bet a lot of people don't know about it because it's brand new. Vehicle sales tax deduction.
Cash for clunkers was popular last year. A lot of people bought a new vehicle. You can deduct the sales and excise taxes you paid in respect to a vehicle that you bought between mid-February and end of the year last year. And even if you don't itemize deductions, you can still claim this deduction on Schedule L of your tax return to boost up your tax write-offs there.
The next one isn't new, but it might be especially pertinent this year because a lot of people lost their jobs.
That's right.
And there are deductions that you can write in association with that.
Right, job search expenses. If you were out of work and you searched for a new job in your same line of work, you can deduct the cost of preparing a resume, employment agency fees, long distance phone calls, and even travel. And the first $2,400 of unemployment benefits is tax-free. Used to be all of it was taxable, so those are a couple of good write-offs there.
Okay, the next one, mileage deductions. A lot of people assume that you can only write off the mileage if you use your personal car for work, but there are other reasons too, right? 2
great tax deductions here. 24 cents per mile for the miles you drive primarily or exclusive for medical care you receive, for blood work, chemotherapy, dialysis, physical therapy. And you can deduct 14 cents per mile for the mileage you drive in respect to your charitable work.
Let's go back to the first one. You can deduct the miles if you drive to medical care?
And the key here is it's got to be primarily for or exclusive to medical care that you receive. And it's required that you have to drive to be able to receive that 24 cents a mile. Yep.
I had no idea.
Absolutely.
All right, the next one is a property tax reduction. What's different about this one is that you don't have to itemize anymore to get this, right?
You don't, and it was new in 2008, so my guess is a lot of homeowners are missing out on this. If you own a home and you don't itemize deductions because you don't have a mortgage, you don't have state income taxes in your state, you could still increase your standard deduction by $500 if you're single filer or $1,000 extra deduction if you're married, in respect to the property taxes you pay for home ownership. And you claim it on Schedule L. A lot of people don't know about it. You can boost your tax deduction here.
Okay, the next one is not a deduction, it's a credit. A lot of people aren't clear on the difference. A deduction, am I right, reduces the amount of income that's subject to tax, but a credit actually reduces the amount that you're paying the IRS?
Dollar for dollar. You nailed it, Maggie. That's exactly
So if you miss a credit, you're just being foolish.
They're much more valuable. That's right.
So what is the child care credit that people could be eligible for?
Most people who work and have younger kids pay out-of-pocket expenses for daycare expenses so they can work, for child care expenses. And most people who work that do that run about $5,000 the limit through a flexible spending account at work, a pre-tax spending account. But you spend much more than that. The $5,000 is the limit through the flex account at work. So you can take another $1,000 of out-of-pocket child care expenses and calculate a child care tax credit for those. And for most people, credit is going to be worth $200 or more, dollar for dollar, right off their tax return.
I didn't know about any of that. First of all, if you pay your child care from this flexible spending account, you can write off as much as $5,000.
$5,000 goes through the flexible spending account tax-free. You don't even pay tax, and you reimburse yourself with, and you don't even pay tax on that money.
So if you are not signed up for that at work, you need to be.
Sign up, and if you're going to have a change in family status, have a baby this year, you can make a new election for that.
Oh, okay. And lastly, the last one, a lot of people don't realize you can write off the cost of someone preparing your taxes for you.
The advice that you get for tax planning or preparing your taxes, you can write off as a miscellaneous itemized deduction. You just can't write off the cost of watching this segment, but your tax preparer, your tax attorney's cost you can write off.
Not if your mom gives you advice or something. It has to be a professional,
That's right? Yes, it does.
All right. Thank you so much,
You're
Ray.
welcome.
And you can get more information about all these great deductions on CBSMoneyWatch.com. We'll be right back. You're watching The Early Show on CBS.